Hi, I'm Bobo and welcome to our weekly recap of Hong Kong real estate. Following the government's complete withdrawal of cooling measures in February, both primary and secondary property markets heated up significantly. However, the momentum was short-lived and by April, the market had noticeably slowed. Currently, developers have slowed flat sales with only 2 new projects launched in May, Topside Residences by CSI Investment and the Yoho Hub 2 by Sun Hung Kai Properties. Despite the boost from On Man Tin, which sold about 271 units, only 1,400 new home sales were recorded in May, marking a 66% drop from the peak in March. After some time, some developers prepared for new launches at the end of May. Leading the way is One Wood Road in Wan Chai, developed by Vantage International, which kicked off its sales today by opening tenders for 12 two-bedroom units, each measuring about 460 square feet. Next up is Henderson Land's project, the Haddon in Hung Hom, with a pre-sale period of about 16 months set to sell as early as this Saturday. The project released its first price list last week, covering 92 units from 1 to 3 bedrooms. After a maximum discount of 10%, the average price per square foot is 19,280 Hong Kong dollars, which is nearly 1.9% higher than the price in July last year for the same series third phase project Baker Circle Greenwich. The recent transaction prices for unsold new units at Greenwich range from 18,000 Hong Kong dollars to $21,000 per square foot. The Haddon comprises a single tower offering 453 units. The developer noted that there is some room for price increases and feature units may be considered for tender. In addition to the projects mentioned earlier, this month will see 6 new projects being prepared for launch, including Kennedy Town's The High Line, developed by Right Honor Investments Limited, a subsidiary of Shanghai Commercial Bank. The development has already uploaded its sales brochure. The single tower project has a pre-sale period of only about 5 months and will offer 173 units, ranging from open plan to 3-bedroom duplex units. Additionally, One Central Place in Sheung-wan, developed by Sinoland and the Urban Renewal Authority and whose sales brochure was uploaded 2.5 years ago, is also expected to launch in June. How well the market will absorb these remains to be seen. Looking at the first-hand market, only 26 deals were recorded in the absence of major new property launches. This marks the weakest weekend of sales since the withdrawal of Hong Kong's property cooling measures. However, some rail-linked properties continue to see some activity. For instance, Lohas Park's Phase 12B project Park Seasons recorded 2 transactions of 2-bedroom units on Sunday. Additionally, there was a notable high-value transaction at Kerry Properties' luxury residential project Mont Vera, where a 3,700 square foot apartment was successfully auctioned last Saturday. The unit, which features 4 bedrooms, 4 bathrooms, and staff quarters, sold for 190 million Hong Kong dollars, including a parking space at about 50,000 Hong Kong dollars per square foot. Following the withdrawal of cooling measures, excitement has gradually waned, leading to more moderate buying sentiment. Interest rates and competition from new projects have slowed the second-hand market, resulting in lower asking prices and reduced transaction volumes. Over the weekend, Hong Kong's 4 biggest real estate agencies recorded 5 to 7 transactions for the city's top 10 blue-chip housing estates, with transaction volume remaining consistent. The second-hand market remained quiet, with several homeowners exiting the market at a loss even after making substantial price reductions. Let's check out 3 noteworthy transactions from last week. Tai Koo Shing recorded 2 loss-making transactions. One involved a top-floor unit at Po Shan Mansion with a balcony, measuring about 600 square feet with 2 bedrooms. It was sold for 9.25 million Hong Kong dollars at about 15,400 Hong Kong dollars per square foot. The original owner bought the unit in 2022 for about 12.5 million Hong Kong dollars and initially listed it for sale at $12 million in February this year. After reducing the asking price to about $9.8 million recently, the unit was finally sold for 9.25 million Hong Kong dollars after further negotiation, resulting in a price reduction of about $2.75 million. The original owner held the property for over 2 years, booking a loss of about $3.25 million. Meanwhile, at Lohas Park's LP6 project in Tseung Kwan O, another unit was sold for nearly 3 million Hong Kong dollars below the asking price. Located in Block 5, the 1-bedroom mid-floor unit faces east with an internal garden view. Measuring about 300 square feet, the flat was initially listed at 7 million Hong Kong dollars. Due to market conditions, it was sold for 4.06 million Hong Kong dollars, a sharp drop of 2.94 million dollars from the initial price at about 12,800 Hong Kong dollars per square foot. The original owner purchased the unit new in 2018 for 4.91 million dollars and held it for nearly 6 years, exiting the market at a loss of about 850,000 Hong Kong dollars. Additionally, a 4-bedroom unit in Tangchang's The Visionary was sold after a substantial price reduction of about 3.3 million Hong Kong dollars, close to the price paid 8 years ago. This was an upper floor unit in Block 1, measuring 1,420 square feet. It was initially listed a year ago for about $20 million. After several price adjustments, it was eventually sold for about 16.7 million Hong Kong dollars, a reduction of over 16% at about 11,700 Hong Kong dollars per square foot. The original owner bought the unit in 2016 for roughly $16.64 million, bringing the price full circle to the level of 8 years ago. Although the book profit totaled about 60,000 Hong Kong dollars, reflecting a nominal appreciation of about 0.3%, when accounting for expenses, the actual gains were modest relative to the costs. For more information on the secondhand market, stay till the end of this video for this week's recap of secondhand transactions across each district. That's all for this episode. See you in the next.